So like I was saying earlier, this is, I want us to go over entry and exit strategies. How do I get into the market? Why do I get into the market and stuff like that? So what I'm going to be doing is I'm going to be using a previous example, a previous trade, rather a sequence of trades that I placed before in the past.
Right.
Yeah, so I think it was last year. So this is 2020, 2019. So 2018 into 2019, the pairs I was focusing on were GBP USD and gold. So for gold, gold was a lot more simpler to trade. I think I need to share my screen at this point. Sorry.
It's okay. Do you currently mainly trade those, or do you trade a few different ones, USD pairs?
Yeah, so I like to stick to the USD pairs because obviously they're a lot easier to understand, right? I'm not going to trade. There's no pride in trading something that's easy to trade. At the end of the day, you want to make money, right? So I like to look for the easiest and the most straightforward trades to place. I don't like to act like I'm some Michael Jackson on the charts. Right? You hear what I mean? Well, I'm pretty decent when it comes to market analysis and trading and stuff like that. However, because I like to sleep well at night and because I manage, a significant amount of money, I like to stick to the very obvious patterns and, I like to trade in the direction of momentum and stuff like that. So USD pairs, I realized they're a lot easier to predict, right? So back to what I was saying, right? So gold and GBP USD were my favorites because they were trending pretty nicely, and I had done the analysis. So we did the last session we had. We spoke about flow of the river. So I had done my analysis on a higher time frame, and the higher time frame had pretty much given me a clear direction. So I decided to scale to a lower time frame, to start executing my trade, just like we spoke about in the very last class, right? You remember, right? Hopefully.
Right. Yeah, I do.
Cool. Do not worry. That's why I said I recorded the sessions so that you can watch them later, just in case you want to just juggle your memory and stuff like that. Right?
On a side note on that Paul, did you? I never got the link to that. How do I get to the link for the previous session?
I'll send it to you on Telegram.
You sent it to me on Telegram?
I will send it to you on Telegram.
Okay, perfect.
Yeah, so don't worry, you get it. I'll ensure you get every single session sent across to you so that you can, when you listen to me speak, you can, you just need some more clarity. You need to go and watch it again just to understand, especially with the examples that I give and stuff like that, right? So, so this is GBP USD. Just expand this pretty nicely, right? So this is the monthly time frame. So what happened was, and I'll explain to you why I took the trades, and everything I'm telling you here was, as it happened, right? So if you went on my YouTube channel, maybe you checked videos I brought out about a year ago or a year, 6 months ago. Like I did the analysis real time, so I traded this real time. So I want to walk you through my thought process while I was trading the market. Are we on the same page?
Sure, yes.
Cool. All right, so obviously, this is exactly where the market was trading at the time. So we were somewhere about here. And, the market was, so I came on the monthly time frame just to zoom out like I always do. When you look left, there's a lot of gibberish, but I always try and come and make sense of the most immediate price movement that is going on. And I always like to come and see if at least I can spot a trend, right? What is a trend? A trend is not obviously going to be that straightforward, like, lower lows and lower high. This, the market collapsing, retracing and collapsing is a trend to me. Like this market is clearly heading lower, right? So this is a collapse. This is sideways movement, okay? If you look at this was actually a range.
Right, I see that.
Right? And so you know, I just come and look at this. I just look at the market for what it is. It's not complex. I just try and on a monthly time frame. First things first is what the hell is this market doing? I look a bit to the left. It's not doing much. When I look to this, I mean, I could see from here we trended all the way to the upside. But I mean, we got here. I made a low, moved sideways. I made a lower low. So these are the kind of moves that interest me, right? You know,
Mm-hmm.
I like for the market to commit in a particular direction. Bam. Okay, this is called an impulse leg. Do an impulse leg, we pull back, okay? Sometimes we can pull back even further like so, okay? Once this happens, okay, then I'm not really interested. But if we pull back and then I see clear momentum to the upside, then I know that, okay, we made a high, a higher low. And then if I start to see something like this, okay, then I'm now anticipating this is what they call a pullback, which will most likely pull back into this level about structure. And then I usually want to hop on it as it's about to take off again to the upside. Am I making sense?
Yes, absolutely.
Perfect. So I'll just go ahead and delete all this, remove drawing, right? So I saw this. This is the impulse leg. Now, all of this, remember, we have to come on a monthly time frame first, just to anticipate, just to understand what exactly is going on, right? Just to understand what exactly is going on. Okay, so I noticed this impulse leg. I'm like, all right, cool. Mr. Impulse leg, thank you for that. And then I've noticed sometimes we don't exactly pull back properly. We can do a sideways movement that looks like this, right? So I noticed this, I noticed sideways. And to be very honest with you, I mean, I've been trading since 2011-ish. 2000,
Okay.
I've been trading about 9 years now. So I'll tell you what, I traded this about here, most of here. I was trading most of here, but I made a lot more, like I made so much money in 2014. So you know, so I was active when all of this was happening, right? So just flow with me, right? So
Right.
you know, so once I was done trading all of here, and then I noticed that the market started to pull back, you know, the thing is, around here, I was trading, I was making some nice moves. The market was collapsing all the way to the downside. I was seeing pullback trades. I was fucking shit up to the downside, you know, and stuff like that. I was making all this money. And then the markets got here and started to turn around and face the opposite direction, right? And then what starts to happen is you start to realize that because you're used to trading in a particular direction, you're not sure because you get used to selling. In a
Right.
downtrend, you get used to selling, and in an uptrend, you get used to buying. And then
Right.
you probably try and sell again when the market is about to correct. Then you get your finger burned the first time, and then that's exactly where you now actually want to. That's when you're like, okay, it's time to reanalyze the whole situation, because around here, from here all the way down here, you're not really doing that much major time frame analysis. You're just on the lower time frame trading pullbacks. Okay, I'll show you pullbacks in this. You're just pretty much on a lower time frame, just trading all the way to the downside. It's not until that lower time frame entry, it's not until that lower time frame strategy stops to work, then you're like, okay, something might be wrong here. It's time for me to reanalyze the whole situation. Do you know what I mean?
Right. Right. Yeah.
Exactly. So don't worry. Sometime, because I know most people are thinking, okay, when do I start analyzing on a higher time frame? When do I know to stop analyzing on a lower time frame? Whilst you're trading, once the market starts to give you a hard time, you will definitely know that it's time for me to just zoom out, you know, and just see what's happening on the bigger picture. So my point here is I was trading on this, I was trading on like a daily 4 hour, 1 hour, all the way from somewhere about here, all the way down, actually from here. It was amazing 2014, right? So somewhere about here, you know, having a nice run all the way to the downside. And then I noticed that we actually started to pull back significantly to the upside. And then this
Right.
is exactly where I started to say, okay, it's time to, you know, re-strategize. Are we changing trend? What exactly is going on? So that's exactly when I now came back on the monthly time frame to what we have in front of us right about now. So then I started to look, okay, we have the collapse, we had sideways, we have collapse. And then, okay, I'm like, all right, cool, we have the collapse, pullback, collapse, pullback, collapse. Could this be a pullback for further collapsing? I'm like, all right, what I'm going to do is I'm just going to try and plot some like significant levels. Remember, we don't plot like weekly time frames are where you go to plot like your key levels, but on the monthly time frame, for the sake of analysis, just for the sake of the monthly time frame analysis, you're going to obviously want to come up with some levels just to see what exactly is happening, right?
Right.
So we've collapsed all the way to the downside, and I'm saying to myself, okay, we're currently trading under this. So this is support. This is major support. There's a rule in trading that states that once we break major support, it becomes resistance. It's just like a floor and ceiling. When you're downstairs, when you're downstairs and you look up is a ceiling. But when you climb upstairs, that ceiling becomes your floor, right? So whilst we were upstairs about here, this was our floor. But when we climbed downstairs, right, this became our ceiling, right? So that's the concept of support and resistance, right? So this support becomes my resistance when I'm trading underneath it, right?
Right.
Are you with me?
Oh yeah, I got you. This stuff, support resistance, has been in my head for a long time.
All right,
So
cool.
I look, yeah.
All right, cool. So, I just decided to plot all of this. And then, to be very honest, I traded this retracement all the way to the upside, which I'll teach you how to do in the next class. So we're going to speak about trend reversals. How do we know when the trend is about to change? So because I understood trend reversals very well, once I saw the patterns from inside of here, my mind kind of like shifted from selling to like, okay, we're neutral now. And then once we popped up to the upside, I started to look towards buying opportunities, right? So anyways, that being said, so we started to pull all the way back. And I was saying to myself, like, if this market, okay, if we pop here and we shoot out all the way to the upside, we have pretty much violated this downtrend, right? And what that means is technically we're no longer in the downtrend, okay? So if we had rallied all the way to the upside, about here, somewhere around here, if this guy had popped up all the way to the upside somewhere around here, I wouldn't have been interested in this market to give me some further downside trading opportunity, right? So I was just watching this key level because we've broken out of here. Most of the time the market breaks out and wants to come and retest before we continue to the downside. So that was exactly what I had in mind. So even when I was buying about here, if you look at this very carefully, I started buying at about 1,000 to 600 pips. I took 1.2640, as you can see. I started buying about here. I didn't stop buying until I got to 1.4. So between 1.2 to 1.4 is 2,000 pips alone. How was I able to know that, we were going to rally 2,000 pips? It was very simple. Once we started to retrace, my next level target was here. So I just held the buy trades I had around here, and then the market just worked its way all the way to the upside, right? So I was making money when we were coming down, and I made money as we were going up as well, right? So, however, I was very careful of this area because this is major support. I mean, once you see a major level on a monthly time frame, you don't want to fuck with that shit, right? It's very, like, you need to keep an eye out for it. So, I put this level here, looking really nice. I was watching as we got here. So when we got here, okay, I was watching price action around here. I didn't just start selling. What I did was I closed out my trade, okay, about here. I closed out my buy trade once we got here, and I started to monitor this level. I said to myself, two things are going to happen. If we break to this upside, I'm not really interested. If we come here and we stall, okay, chances are that we want to actually want to continue back to the downside. So what do? I just zoom out pretty nicely, okay, and I come and put my level down here, okay, and I say to myself, okay, so between 1.375 to 1.198, you're looking at about 2,000 plus pips between here to here. So I just said to myself, okay, if we sustain below this level, we're going to come here, and if we break above here, we're probably going to shoot into one of these. Then I'll have to start plugging some significant levels that might be in here. So I just said to myself, okay, it's ABC, right? So at major points in the market, two things are always going to happen. It's either we break it in the wrong direction and just fly out, or we sustain on that level and we continue in the direction we're supposed to be going. So at this point, this is 50-50 around here. I'm not usually trading. I like to see the market commit to me. Now, what do I mean by the market committing to me? What this means is I need the market to show me, like, you know, when they say, okay, this guy needs to slip up, right? I need the market to slip up and just be foolish enough to just tell me, you know, just show me your plans in advance. So how did this market do this in this scenario? We came here, I mean, this was a very green, nice candle. We came here and what did I see? The next monthly candle was this is not a bearish engulfing candle. However, we took out at least half of the previous month's trading. So this right here is danger, okay? This right here is telling me that, okay, we are actually, first of all, you want the market to respect the level, which it did right about here. And then once this formed, you know, at this point, I'm just watching. Now, if I took you on the weekly time frame, which I'm going to do shortly, you see this in, because this is a monthly time frame, it's just showing one candles. But on the weekly time frame, it will obviously show you more candles, and then you get to see the market react to this market in real time. Okay?
Right. Now, one question here. Now, so you're kind of doing your analysis there, and you're saying, okay, I'm not trading right now.
Yeah.
These are monthly candles. So are you not trading for like 2 months, roughly?
Yeah. So what is happening here? So inside of here, because I had taken all these pips to the downside, I had taken all these pips to the upside. Like I wasn't trading inside of here.
Okay.
And I'll tell you why, right? I always like, I need the market. See, at this point, it's 50-50. Okay. If I start trading inside of here, I'm not sure, like, I'm not certain if I should be bearish or bullish. Do you get what I mean?
And you don't have the trend with you at this point because you don't know what the trend is right now.
Yeah, exactly, right? Because it was in a downtrend and then we started to retrace. But if we break above here, this is no longer a retracement. This is a change in trend, right? So this is what is going to determine if this was just a retrace or if this was a full change in trend. If we still stay below here and continue heading lower, then this was nothing but a retracement for further downside. But if we break above here, it's a totally different story. So once I'm here, I'm done. Like I'm waiting for the market to give me the next course of action. Okay?
Okay.
Cool. So, and then, you know, I start to watch and then I see, you know, the market is playing up about here. Okay, so what I like to do in situations like this, or rather what I did in this situation was I just simply took out my, what I like to call my counter trend line. So a trend line is something like this. You're familiar with this, right? This is a trend line. Yeah. Trend line looks like this, right? So this is a trend line. I mean, the market is touching it as it's going down, blah, blah, blah. Now a counter trend line is a trend line that goes against the trend. So this is exactly what a counter trend line looks like. Okay, so the same principles as a trend line, you know, is the same principles you use for a trend line is the same principles you use for a counter trend line, right? The only difference is we're going against the trend. So this is the trend, we're drawing the counter trend line. And the reason why I like to draw counter trend lines is because now this market is retracing against this trend. If the market is retracing against this trend, it is trending against the trend. So if we're trending against the trend, we definitely do have a trend line, okay? This is a trend coming lower. It has its trend line. This is a trend going against the original trend. It has its own trend line. And the reason why I like to use a counter trend line is because this guy is the reason why this guy is still moving, is still trending upwards. If we break this guy downwards, that means there's nothing holding this uptrend anymore. If we break it to the downside, there's nothing holding this guy anymore. So once we break this guy, that means we're free to go, we're free to come down. Do you get what I mean? You understand the concept I'm saying, right?
Yes,
when we were heading to the upside, this guy was acting as support. It was supporting this guy to the upside. This is the only reason why we're not coming down. So if this market is courageous enough, if the sellers have enough volume to break this counter trend line, that means we're homebound to the downside. We're coming down, right? So at this point, what I'm doing is I'm just checking to see. We've tested here. We're struggling to break here. If we break to the upside, fine. However, we're testing here. If we break to the downside, we're coming down. So at this point, it's 50-50. We break here, up. We break this counter trend line, we're coming down, right? So the market went ahead and did just that. So at this point, now I have a direction. You feel me? Now I have a direction. Now the market is telling me, dude, I want to start heading lower. But prior to now, there was no clear direction. It was 50-50. Now I have a clear direction, okay? Now that the market has pipped down, it's popped his head out like, okay, yo, I'm ready. Now I'm like, all right, cool. Okay, I can now scroll to a lower time frame to start looking for what? Selling opportunities. Now I'm not looking for buy opportunities. Now it's time for what? Selling opportunities and selling opportunities only, right? So as
I got two questions, Dapo, real quick. So at that strong green candle we have up until the ceiling there, the resistance.
Yeah.
Now, if I count the candles until we get that break in the counter trend line, 1, 2, 3, 4, 5 candles. So literally 5 months I'd be on the sidelines with this pair at least.
Yeah, with this pair at least. And what happened was, if you notice, right, we peaked to the upside and then we pulled back and we attempted it again about here. So what actually happened was I actually had a trade inside of here, but it was a buy trade because there's a rule that I have, right? If a market gets to a major level and we don't want to break that major level, the market will come and at least touch it again before we start heading down. I'll take that again. Okay. So we have, let's say we attempt this level, right? Okay, and we pull back. Okay. What usually happens is we usually come to attempt again.
So a double top, basically.
Or a double top, right? So it's when we don't break here to the upside that I know that, okay, we want to start heading lower. However, I'm going to still buy this guy to the upside because he needs to get here for it to make his decision anyways, right? So I'm still going to, the only thing is when we get here, I might just take out maybe most of my position and just move stop loss to break even and just wait and anticipate, right? So that's exactly what happened here. I'll show you the whole trade on the weekly time frame. But on the monthly time frame, I'm just trying to this thing. So on GBP USD, yes, we can save for that for at least 2 months. We didn't have any trade on this pair, which is absolutely fine by me because this time I can't remember where it was. I was probably in London, driving some fast cars and just chilling, right? Just waiting for the market to just do its thing. Okay.
But it seems like you would have like some smaller trades inside of that noise there.
Inside of this noise, I only had one trade.
Okay, gotcha.
I only had one trade, and I only had one trade. Just that's to push it again to the last stretch. The last stretch to the upside. That's exactly what I did. And once we bounced off of here, I was out. I was like, all right, cool. I'm out of here, guys. I'm out of here. So I drew this counter trend line, and then once we peaked about here, now I was like, all right, cool. I think we can start trading again. This was probably after a month and a half or two, right? So I'm going to quickly go over to the weekly time frame just to show you what now happened, how everything panned out, right? So this is everything on the weekly time frame, right? So this is that counter trend line that I was talking about. Right. When you're looking at it on a monthly time frame, it just looks like a counter trend line. But when you look at it on a weekly time frame, this is actually a freaking trend line. Right? You see what I mean? Like this is a trend line. Right? So this is
do you trade that or you don't trade that at all?
What, this entire step to the upside?
Yeah, the counter trend moves.
So the counter trend move. So You have two options. You can decide to trade it, or you can decide to just stick to everything, right? To just following the flow of the river. But what I like to do when I'm going against the trend is, if my risk is, for instance, 5% on this guy's to the downside, when I'm going against the trend, I like to reduce my risk to half of it.
Gotcha.
You get what I mean? Because
yeah, no, definitely. Because
yeah,
that's it, not going with the flow of the river, so reduce your risk if you're going to go
reduce your
against.
risk. Exactly. Cool. So, what was I going to say? Shit, I forgot what I was going to say.
Sorry.
Right. Cool. So, but however, I was buying all the way from here, all the way to the upside. I'll show you how to determine how was I able to know that this entire bad boy was about to reverse to the upside, right? What exactly happened? It's called a trend reversal pattern, right? I'll teach you that in the next session. Cool. So as you can see, when we peaked here, we pulled back. And then if you look very closely, we attempted it again. So I still bought about here to attempt it to the upside. It was when I saw this double top, when you see a double top, and then you see a double top on the higher up. When you see a chart pattern, a double top, a head and shoulder, when you see patterns like that form on a high time frame, like a weekly and a monthly, shit is about to go down. Okay? So we came, apart from the major level. So, I had every reason to anticipate a trend reversal. First of all, major level. Then we had a double top inside of a major level. It's a no-brainer, right? So at this point, actually, before we even started, once the market popped here and we couldn't break above here, in fact, once we get to this point, the high point, and I see the market fails to break above, immediately I put this guy in the range, right about so. And I say to myself, two things are going to happen, right? Is either we stay inside of here and still try and pop above here, or we come to the bottom of here and we break lower. Now, if we pop above, the trend continues. If we come down here and break below, it's a change in trend. You see, the characteristics of an uptrend, or the characteristics of any trend. So let's say an option, right? Is this uptrend, as you can see, was making higher high, higher low, higher high, higher low, higher high, higher low. Okay, some form of the high, higher low, higher high, higher low, and then we came in and made equal highs. Once you see that equal high, you're like, something's wrong. Something is about to go down. So at this point, I'm out. I'm chilling. I'm watching. I say to myself, okay, there's still a chance. The next candle this market can still push higher to maybe say he wants to come and do a higher high. But if we come in and now come and put in equal highs and equal lows, then it just might change, right? And then what happens? The market comes and even breaks and now forms not just equal lows, but lower lows. Now this trend is really about to change. And not only did we, because this was even acting as some form of a support, as you can see, not only did we come and break this support level, we also came to break this trend line that was supporting this guy on this move to the upside. So you don't really need more than that, as an indication that, hey, we're about to. So all I simply did here was I did my analysis on the higher time frame. This is actually a setup, right? This is a setup. So what I did was I did analysis on the higher time frame, allowed the market to set up for a trade on a higher time frame, because as we started to point lower, the next level, my overall target was about 1.200. This was 1.35. So between here and here was what I simply did was I did the analysis on a higher time frame, allowed a setup to form. But the thing about when the market sets up on a higher time frame, what happens is the pip count to your target is usually higher, right? You have a lot of pips to catch. So I do the analysis on a higher time frame, and then once I have 1,500 pips into the future, I then scroll lower to look for selling opportunities That way, I can risk just 50 pips to catch this entire bad boy move to the downside.
And when you say scroll lower, you mean go to the lower time frame, like a 1 or 4 hour to get
exactly right, because on those time frames you can see smaller setups. So your duty on lower time frames is to find those smaller setups that are in. So what I'll be looking for is I'll be looking for selling opportunities like that look a bit like this on a 1 hour time frame, okay. And then as the market starts to wobble down to the back to the downside, I would definitely execute my trade somewhere around here and have a small stop loss of about maybe 50 to 60 pips, sell here. And then instead of closing this trade, because what most day traders would do is they would get into the market, have their stop loss, and because they're day traders, they obviously have short-term targets. So I would use a lower time frame strategy to get into this market with a small time frame setup. Sorry, with a low time frame stop loss. So if I get into this trade, right? I'll give you an example. If I sold here, straight up, my stop losses need to come above here. This is the previous high. If I sold here, my stop losses need to come here. And if it 135 to 143, you're looking at almost 800 pips. That's not going to fly.
Right.
There's no point. I might as well day trade.
Right. Yeah, I get that part gets me hung up sometimes when I look at the higher time frame.
Yeah,
so I'm understanding what you're saying now.
Exactly. I understand. A lot of traders the reason why they don't like to trade on a higher time frame is because when they see a setup, their stop losses are also massive as well. So it doesn't make any freaking sense. So me being the very smart guy that I am, I mean, you need to give me my props for this shit. What I did was I'm like, okay, I'm going to hypothetically trade on the higher time frame in my mind or a demo account, click sell here, put my stop loss here and my take profit here. I'm like, all right, cool. But I noticed that the market is not just going to drop. It's going to come down in sequences, just like we did here. When we wanted to go from here to here, we didn't just go like this. We were relaxed, man. So all I need to do is I looked for a nice pullback trade like so, bought here, small stop loss, maybe 50 pips, max 100 pips, and I rode this bad boy to the upside, keeping my risk at 3%, and I was able to return 40 to 50%. We on the same page?
Yes, no, definitely. I have one question about that, what you just said.
Yeah, sure.
And I've been doing what you said in the videos. Like recently, what I've been doing is when I get in on the bounce, I do split my position in half. And when I get to the first level of resistance, I take one off and I let the other one run with like a trailing
Did you watch
stop.
my YouTube videos?
Yeah, I watch all the videos that in the class, and one of them talks about that, and that's what I've been.
Oh, really? You're smart guy.
But the thing is, I was curious about that. Is now, let's say I got in on the first bounce here, and I took my profit at the first level of resistance, and then I'm letting the other one ride. On all the bounces that are happening on the way as we're going up, are you getting into like another trade on the bounce while that other one is still profitable and going up? You see what I'm saying?
Exactly. So I'm compounding.
Okay.
This is why I can be patient enough for the trade the market to set up on a higher time frame, because when it does set up, when you hear me say I predict 1,500 pips into the future, I'm not only taking 1.5 because I have multiple positions. Sometimes I have 3 positions in a 1.5 stretch. So I'm not just taking 1.5, I'm probably going home with like 4,000 pips.
Okay.
Do you know what I mean?
Yeah.
So the trade needs to be in profit first. The trade needs to be in profit first before I decide to add more positions, right? So that's exactly how it goes. But always ensure that you take out 50% at the first resistance level, because this guy could have easily turned around back down and dropped.
Right.
You know what I mean? So
so if you take out the first one and you move the second one to break even,
you have something.
then it's a risk-free trade at
It's
that
a
point.
risk-free trade. There you go, buddy. It's a risk-free trade.
But on the next bounce that happens, the one that I took off and I took my profit, I would get in again. Like let's say I was doing 0.25 and 0.25 lots.
Yeah.
I took off the first 0.25 lots, took my profit, and I'm letting the other one ride at break even. On that other bounce that happened right after, right there, I would put on another 0.25 and ride that up, right? While the other one is still profitable.
Exactly, and just push all this one all the way to the upside, and then just keep adding to the bounce and keep adding to the bounce.
Now the stop loss on that second one I just entered, would I put it right below that like a 50 pip stop loss roughly?
Yeah,
right below
exactly, right below here. So you just come and look for, just give it some distance, right? So for my stop losses, I don't have like an exact pip count. I just like to look at market structure, right?
Okay.
So I just give it some space, just in case we might, some market manipulation might happen. So if this is the area, I probably come and give it somewhere about here.
Okay.
Just to give it some space. And because of the amount of pips that I'm potentially about to make, I can give the market some really good stop loss room.
Okay.
Exactly. So, that's it. So that's exactly what I did here. Okay. And then give me a second. And as you can see, as we break, now, one thing that I want to clarify here is this. Right? So, once we have a change in direction, I mean, this is going this way, right? Once we have a change in direction and we want to start heading in a different direction, okay? I don't just start selling, okay? I don't just start selling. What I like to do is I wait for a shootout, okay? I wait for a shootout about here. And then I like to always wait for the market to give me some form of pullback, okay?
Okay.
This guy. So we're on a weekly time frame. So if I come over to the daily time frame, so monthly, do the whole flow of the river, check on everything. Weekly, on this weekly time frame is exactly where I would then come and obviously plot those my major levels. So my major levels will be looking like this. I know I'll have a major level here. I'll probably have one about here. Have one about here. I'll probably have one somewhere itching somewhere about here. Right about here. Okay, so these will be my major levels. Actually, I think I have another one here. This one, I don't really trust this one that much. Okay, so this right here will be a level for me. So I'll just plot these guys out. And then these guys will now be my guide all the way to the downside. Let me just adjust this pretty nicely.
So do you use these lines or do you use the zones that I've seen you using in the
no, I use the zones. I just don't have the energy to start mapping out those zones right now. So just imagine these are the zones, right? Gotcha. So exactly, right. So, and these will now be my guys. So once I'm done with this on the weekly time frame, then I go over to the daily time frame. So it's on the daily time frame that I then look for the pullbacks that I was speaking about, right? So the pullbacks, so as you can see, we started to collapse. If the market comes out like this and it's looking like this, the market would always give you, these are my entries. These right here. Let me just cut right to the chase. These are my entries. These are my entries, okay? We pull back, usually because we're just coming to give ourselves a new trend. Usually the first pullback, I wouldn't trade it. Now, the reason why I might not necessarily trade the first pullback is because I want to use this, I want to understand if we're going to set up for a trade, how is it going to look like? So once I was able to see that this is what the pullbacks on the daily time frame will look like, just like a flag, okay, once I was able to anticipate this is exactly what they will look like, once I was able to understand the rough number of candles that will form for me, like the entry, how many candles are most likely going to be in an entry, you know. So I got 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 candles formed about here for this entry. So I'm going to use this as a benchmark to try and look for other potential entries. So usually the second and the third entry usually look like the first one, okay? Feel free to trade the first one, just like the first, I usually like to not trade the first one, just like this one, okay?
Right.
I'll take, so for instance, this was an entry about here. You can see how jagged and crazy this one looks, right? So once we pulled back and I saw that we actually did rally out of here for like, this looks quite rocky. Remember when you go in like the freaking, you need to do like the whole 4x4, you need to come out of like a muddy road. Like this was some crazy setup, right? So now I know that the next setup is going to be crazy as well. So I wouldn't necessarily be looking for a perfect pullback and swoosh to the upside. I would be looking for a jagged kind of like setup, right? And same thing for this one. This was a nice, smooth, small, petite pullback. So subsequent ones, I was looking for petite pullback as well, right? And that's exactly how I took advantage of this one and this one. Now, let me also go over into something, right? So you get into this trade, your stop losses come above here, okay? When you enter about here, okay? When you enter about here, if I went on a 4-hour, trust me, this pullbacks will look a lot bigger, okay? Because it's daily, it looks a lot more condensed, right? So this is exactly where I would most like. Now, how do I get into the market? So as you can see, the strategy is the same for the higher time frame and for the lower time frame, okay? So I wait for, you know, the counter trend line to be broken. Same thing with that, I wait for the counter trend line to be broken. Candle comes out, it commits to me. I sell, stop losses come here. My first level target, buddy, my first level target must always come here, right? And then I move, once the market gets here, okay? Once the market gets here, I take out 50% of my position and I move stop losses to break even. You can see this fucking market came in here and started to pull back up. It always happens. Okay? It always, not like it always happens, but it will happen maybe about 70% of the time. Okay? So don't get fooled by thinking, oh, just it happens most of the time. So what used to happen to me, like I developed this aspect of things, this whole strategy, I had to develop it to suit my own trading style. What I noticed was I would get into a sell trade, right? And then the market would get here. I will make all of this, so much money, all this money, and then the market would come here, only for us to retrace all the way back to the upside and even come and stop me out. There's nothing more frustrating than seeing yourself 350 pips into profit, and then the market coming to stop you out. You can almost throw your laptop out of the window. So I said to myself, if I'm in profit, I will never give my profit back to this market. I will never turn my profit into losers, because a lot of people just sit on their hands and just allow the market turn around.
So this is something I struggle with a lot, that when you mentioned, you're talking right about up my alley, is I see that happening. Like, so your first target, do you not mess with your stop loss until the first target is hit? You give it time to mature, or do you, let's say it's getting close, like that first green candle, like you see the green candle with that long wick at the bottom there?
Yeah.
Would you have said, okay, you know, this is close enough, I'm going to take my first profit?
So what I do is I set an alert here. Or if I'm getting into like a 10 lot trade, I can click sell five. I can sell 5 lots twice.
Okay.
Yeah, and then the first 5 lots comes out here. I'll just move it, take profit here. Done. Dude, I don't care how little it is you made between here and here. Be 1%, 0.5%, 2%, 3%. Take it and stack it up, because you're gonna need it. Take it and stack it up. Okay. Usually I
When you
don't
say
count.
stack it up, what do you mean?
So stack it up for, because you're at the end of the day, you're trying to grow your account.
Right, right.
You're trying to grow your account like 2%, 1%. Not every trade is going to be a home run. Not every trade is going to give you that massive move. Okay, because you're also going to battle losses as well in the process. So you want to have enough cushion for when the market comes for your stop loss.
Right.
You get what I mean? So it's better to take 3% than to lose 3%. Okay, so whatever, I don't care how little it's, because usually the space between the entry and first level target is not that far. I'm not even gonna lie.
Right.
So take it and hold it. Okay. If, as you can see,
And I get that part. I do understand. I just, what I was saying is that I sometimes I've seen it come really close to that target that you have there. Like I even make it a little bit conservative. I move it up a little bit, and it comes real close to that, and then it just pops all the way back up. And I'm thinking to myself, maybe I should have taken my first target a little higher and just taken some money out. You see what I'm saying? Is that what you're saying? Like I should like.
So put it here, put it at the
Right.
body of the candle. Just put it here. Put it here. Put it here. And then also sometimes when I see, once you see a bullish engulfing candle at the 100% retracement, get out.
Okay. Okay.
Get out, because this
That's a
is a double bottom, whether you like it or not. And
yeah.
if you go back to, I also use Fibonacci for here as well, if I wanted like my setup and stuff like that. So when this market was pulling back, 50 Fib, all of that. So you watch my video on Fibonacci. There's a guy called Tom. He's really good.
I did see that, and I did watch his video. So I
Fantastic,
definitely,
right?
yeah, it's awesome.
Awesome, exactly. Yeah. So back to what I was saying, right? Cool. So we have the first setup, the second setup. Now, one thing I've learned from trading over the years is the third setup always does the trick. Is the third setup that's now going to just throw up, right? So, and the reason why that happens is because the third touch of the trend line, which is supposed to be here, didn't come in quite close. It came in quite close to that. Let's just draw this properly, right? So this is the first touch of the trend line, about here. Just adjust this like nicely. First touch, second touch. The third touch of the trend line always does the trick. This is the guy. So if you're doing your analysis, right, and then you've seen all of this, and then you've seen the first one, let's say you missed the second one, don't be scared, man. The third one, that's what's actually going to give you most of the money. And I'm pretty certain that, look very carefully, when we decided to collapse, I'm pretty certain that this is where the market decided to turn around.
Okay, yeah, because it's a huge.
Can you see? So when you're getting into this trade, instead of having like your take profit, your first level target was here, but where'd you keep your second level target? So instead of having it like no man's land, you then use these key levels to help guide where the market might most likely turn around, again, right? Yeah. So I've showed you entry and exit. Now let's go into some more complex stuff that might happen. Oh my goodness, what just
happened? You changed to US oil.
Yeah, I did. PSO, right? So let's just come here. Now, a little disclaimer. As you can see, we're setting up again for further downside. And I mean, at this point, you would most likely be drawing your counter trend line, because I mean, this setup looks the same as the previous one. You would most likely be drawing your trend lines and your counter trend line, and you will be getting into this trade about here, okay? However, one thing I did realize is the fourth setup is always the fucking setup. Like it's gonna ambush you.
Okay.
It's gonna ambush you. And also look, It tried to come down, but this major guy was here. And look what happens afterwards. So you sell here, and before you know what's happening, the market is pushing up, and then your stop loss is here. And then every second you're monitoring the market. Has it come down? And then it's edging, 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 and it just edges go out, right? So yeah. I like the second and the third setup. Okay, so what have we learned so far? Allow the market do what it needs to do. Let it commit in the right direction. Once it does that, come on the daily time frame. Watch out for pullbacks. Trade the first one if you must, but the second and third one always does the trick. The fourth one, not so much. Ensure to have your key levels that will guide you, right? And exactly. So now, after this fourth setup happened, okay, after this fourth setup happened, okay, the fourth setup happened, and then that happened, and then we started to rally all the way to the upside. Now, it is very natural that at this point, you like, because you're like, oh my God, like, none of these kind of setups look to be happening here. Like, what do I do? What do I do in this situation? Like, what do I do? Now, what you do is this. You do nothing. So we've pushed all the way to the upside. It looks like the market wants to reverse its trend. Two things are going to happen, right? It's either we blow out, hold on one second. It's either we blow out to the upside or, I mean, we sustain below here, right? So this is now, so prior to now, you were obviously micro zoomed in, probably on a 4-hour time frame, trying to highlight these things properly. You know, everything is looking really nice. You're all micro in here. Oh my God, not again.
So that was actually my other question. So we're on usually, I mean, you were saying get into the second and third bounces, possibly the first one, but your entries are based on like a lower time frame, even though you're trading the daily, but your micro entry should be probably in the 4-hour or the 1-hour, right?
Exactly. Like micro entry 4-hour, 1 hour, just to get the best, you know, candles and stuff like that. However, your stop losses still need to go above the previous high.
Right. Yeah. Okay. Gotcha.
Right.
Yeah.
So we're above the previous high. Everything is looking pretty nicely. Everything is looking pretty nicely, and everything is looking pretty cool. And then obviously you get into this trade, this fourth one, and then it stops you out for a loser. And then the market now goes in a direction that you're not familiar with, right? Now at this point, the market will force you to zoom out. This is not where you want to zoom in and start looking for buy opportunities to the upside. No. This is where you then zoom out. When things start to confuse you, you zoom out. Okay, this is now where you zoom out. Now, one thing I realized from the market is, yes, we're giving, so you can see small setup, collapse to the downside. Sometimes when the market pulls back like this, we're not necessarily changing the trend. We're just going for a bigger retracement. So you can smack out your big Fibonacci, and just draw it wide like this on the top. Okay. And then just see, now you're just doing hypothetical stuff like, all right, cool. I've made all this money. I've made all this money. I want to see what the market is going to do next. If we sustain below here, that means, because at the end of the day, this is an impulse leg. All of these guys are just nothing but one leg. If I went on the weekly or the day, on the weekly or the monthly, it would just show me a bunch of candles in a straight line like so. Okay, it would just show me a bunch of candles like this. So it's a possibility that we want to have a quick pullback. So this is why it's important for you to zoom out. So you come to know, so it'll help you identify, okay, are we changing a trend or are we just going for a bigger retracement? You feel me?
Okay.
So
Yeah.
this will help you now decide, okay, we're not coming in for, we're not actually like, are we might just be retracing or we're actually going in for change in trend. And then we now go for a bigger setup. Okay, as you can see, we're now going, as you can see, that we sustain here. The principles still remain the same. Use your counter trend line. And when you're drawing your counter trend line, don't draw it to the body. Unlike your support and resistance that you put on the body of candles, your trend lines must always come at the candle, at the wicks of the candles. Why? Because this guy's your helmet, right? This guy, if this guy gets broken, you have to pull your trigger. And you don't want to pull your trigger prematurely.
Okay.
This method has saved me from a lot of premature entries. I'm very sure you've encountered premature entries before in your trading,
Yeah.
right?
Yeah.
But you got in a little bit too early, and then you realize that, oh, the market wasn't actually ready to start heading in your direction, right? So look what happens, right? The market comes into, because we plotted here, the market comes in here and then bounces off it. However, if I had drawn it too close to the candle, look at what happened. We would have been selling here. We'd have sold already and would have been waiting. Okay, come. You would have been like, all right, cool. Okay, this guy is going to come. And then what happens? Then you'd be like, but I was in the position and the market was giving me all these pips. And then we just go in the middle of the whole thing and just decided to turn all the way to the upside. What's happening? Failing to realize that the market was not done. It wasn't done. This is a trend, it's a counter trend line. A counter trend line. It is a trend line. It is supposed to act as support for this guy to the upside. Okay? So you have to remember that it's acting as support, right? And then because we're obviously in a downtrend and the market eventually wanted to start coming down, you just adjust it down here and then you can see the market then decides to now start rallying all the way, collapsing all the way to the downside. Where do we take out our first level target? As you know, at the body of the 100% retracement, look what happens. We come in here just shy, boom.
Right.
Are you getting the concept? Are you following me, bro?
Yeah, no, yeah, for sure.
So I'm just trying to explain to you the different scenarios that can occur when you're trading. And then, like I said to you, so for this one, the market was pointing lower, low, lower, high, lower, low. So we knew to keep on selling, right? We knew until we got here, and then we came in for the bigger retracement. However, we've come in so there are different scenarios. I'm trying to explain to you these different scenarios that can happen when you're trading a trend. Okay, so the first kind of scenario is when everything is moving smoothly, you're seeing these small setups. And then the second scenario can be when the market pulls back for a bigger retracement. So you zoom out and be prepared. And then the third scenario is when we come in and then we fail to break and continue heading lower. What do we do in this situation? What you do in this situation is one thing and one thing only. You put this market in a freaking range because it belongs in a freaking range. If you don't come and commit to me with a lower low, I'm not going to look for more selling opportunities. You have successfully put yourself in a range, and that's exactly what's going to happen. And I'm not going to do anything until you come out of this range. It's either you break higher for a change in trend to the upside, or you break lower and continue showing me some love to the downside. So I'm just going to wait for you at this point, right? Because there's nothing I can trade here. I'm not going to come and start doing like counter trend line to where. So when you're inside here, I mean, if we'd come lower, let's say the market had done this, okay, I'm like, all right, cool. And then I can now look for pullback here. And then I can now look for selling down here, right? I mean, you didn't do that.
Yeah.
Or even, you didn't even do something like this and even maybe attempt to pull back even a little bit high so maybe I can look for a bigger Fibonacci to use you for. You didn't even make a lower low. This at least did make a lower low before he came for the retracement. But this dude, he didn't make a lower low. He came in and put in equal lows, just like this guy about here. that came in to put equal highs about here, right? So I will range you straight away. I bought here. You were supposed to come and put in a higher high, but you came in and put an equal high, and then you start floric. What's that word? Floricking? Folic. What's that word again? When you just,
I don't know.
can't remember the freaking word, man. Yeah. So you just came here, you're playing around here. All right, buddy. Since you don't want to have since you don't want to have an ambition in life, that's cool. I will keep you in this range. When you're ready, you're gonna let me know. How do I know it's gonna be ready? Simple and straightforward. You need to come out here. Come back outside and play with me. Okay? You've put in this double. This right here can be a potential reversal. This right here is looking like a double bottom. Although we have space to the downside, so come and give me the space. Come down here. Come and tell me what one. Come down here. Don't just come and try and act like a dodgy guy and be giving me 50-50 signals. I don't like that. I would never trade this, right? So I'm watching. It's playing around, and then he gives me what he needs to give me, and then he pops back up for a pullback, right? And then I'm like, yes, now you're talking to me. Now you're talking to me. Talk to me, buddy. Now you're talking to me. I like this. Okay, so I'm watching, and it looks like it's coiling up. So I'm trying to look for, maybe I can potentially look for a pullback setup. So it looks like it's pulling back up to test here. Now I'm now looking like, okay, maybe we're pulling back here, for a wham to the downside. Now I'm excited.
So this is one thing right there. Like, you see that first retest that it did when it broke out, and then I would have been tempted to go short there. Is that wrong?
So if, for instance, we pushed out here and then we pulled back, because of the amount of candles that formed about here, I wouldn't have been interested. This is exactly why when we break out of a range, I don't really like getting into the first setup per se.
Okay.
So it was because this one formed pretty nicely. I can't remember if I took this trade, but I remember taking this one and this one, right? But for this one, I mean, you don't range this big and then break out for this kind of very quick turn to the downside. Nah.
Gotcha. Yeah.
I know this guy. He wants to stop me out. This is he wants to try to bait me. Do you know when I'm trading the market, I always speak to the market all the time. I'm like, I know you, dude. I know you, man. You look like a fucking stop loss, man. Shit, don't play with me like that. Literally, I've been speaking to the market like, I'm like, I know you, dude. Don't do this. So, Rich, I tell you what, right? You're the last person I'm gonna have a one-to-one with, So
yeah, you told me last. I remember you told me.
Yeah, you're a lucky guy. After this, I'm moving on to some really bigger stuff. So enjoy it while it lasts.
No, I appreciate it, man. So you're not gonna do, like, you wouldn't, like, if I needed some input in the future and I wanted to just pay you like.
I can speak to you like for 15 minutes. Yeah, you can just show that way. You already know what you're doing, so I can just speak to you for 15 minutes. I'm 15 minutes and be like, yo, do this, blah blah blah. That's different. I'm talking about like having to like break the chart down like this and go over.
Gotcha. Yeah.
My mouth hurts, man. I'd rather do this on YouTube and broadcast it to the world than have to.
It's a better risk to reward that way. Not once I risk to reward, better return on investment.
Exactly.
Of time, yeah, because you're investing time. So
exactly, cool. So, and then I didn't take this sell position. So I was just watching it. So what I would do is, once we break out here, I have this little thing that I like to do. Once we break out here and I see that the market is pulling back, I just come and put this a minor support. I did this for AUD USD. If you remember the first class we had, when AUD USD broke out of its range, I still put like a little barrier, just to see what exactly was happening. And truth be told, we came here and then we bounced up. I wasn't, because if we want to get here, we're going to have to pass here anyways, right? Cool. So I just kept that here, and, it really saved me. So I was then watching this guy. And truth be told, if I had sold here, I'd have gone and stopped out, right? So I was watching this guy, and then we started to pull back in. Now, the reason why I decided to get into a sell trade here was I watched this market come in here, and it manipulated this level. So what do I mean by manipulated this level? Now, you have to understand that people who sold about here or sold on the breakout have stop losses about here.
Right.
So I like situations whereby the market comes and does this to a level, right? We come and do this to a level. We test the level. We pull out from it. We come and run stops. And then we pull down. I love this. You know why I love this? Because it's just telling me that, hey, I stopped out all the small boys, all the kids. I actually don't want to go up. What I actually want to do is come down. So this way, I'm not worried about a stop loss run anymore because it's already done that. So I noticed that we had a stop loss run about here.
Right.
Because think about it, all the people that sold here have stop losses here. And then all the people who wanted to buy, if the market ever came back inside here to rally to the upside, will have their buy trades here. So it's messing up traders both ways.
He's stopping out everybody on both sides.
Stopping out everybody and taking on buy trades. So he first of all stopped out guys, and then he's taking out buy guys and sending them lower. So at this point, I'm like, all right, cool. It's time to sell. So I sold somewhere around here. If I draw my counter trend line pretty nicely about here, sold somewhere around here. And then obviously first level targets must come here. And look what happens. The market comes and pins it right about here. And then my trade gets taken out for 50%, and then obviously my stop loss is somewhere around here. So I close the trade out for break even, and obviously 50% of my trade gets closed out here. So what this tells me is something. We are not ready to head lower. We are not ready to head lower. So at this point, I'm like, because the truth is, in my mind, when I sell here, I want to take it all the way down here. Because if I look left, this is actually my overall target. So, you know, it's looking, I mean, if you look at it, it's looking like it needs to come here, innit? It's not the market, like, because I'm not even going to lie to you, right? Just because you predict 2,000 pips into the future does not mean the market is going to go down without a fight. No.
Right.
It's not just going to give it to you. Like, it's not just, you have to work for it, right?
Right.
It's not going to give you, like, all that pip on a platter of gold, right? So that's why when I get into the very first trades after the breakout of, you know, I always like to hold it. Like, I was just trying to hold it because, but the thing about holding it is you have to have some brass balls, to be honest, because you see the market pull back all the time. Because, I mean, you are in all this profit, and then we pull back. So from here, this is 1.33, and this is 1.26. So you're looking at about maybe roughly about 700 pips in profit, and then we pull back another 500 pip against you. Can you stomach that?
Yeah.
You get what I mean?
Yeah, and that I struggle with that. So, yeah. So do you typically? I mean, because you're holding, right, for longer term.
Yeah. So usually on this first trade, I would hold this one, you know, hold it tight, and then I just forget about it.
Okay.
And then I come and then I try and add again and keep adding. And then, you know, I just keep locking in profit if I get stopped out. So I use a trail stop. If I get stopped out, that's fine. Then I keep coming to look for places to add. Don't forget, you must always take out 50% here. I mean, I really wanted this to be the home run down here. It didn't happen. But you must always take out 50%. And exactly. And then hope for the best. Okay, get into the trade, take out 50%, hope for the best.
Right.
Strategy, right?
Got it.
Exactly, right? So, and then I'm like, all right, cool. What the hell does this market want to do now? And then what happened? We start to like push all the way back inside of here. I'm like, well, I don't really know what you want to do, mate. So what I'm going to do is I'm just going to leave you. So the market decides to go against me. So obviously, like I said to you, once you see, because I mean, we've come in and put in a lower low, right? I'm like, okay, maybe we want to go for a bigger retracement. So what do? I take from the swing low to swing high. As you can see, we respect the 50 Fibonacci level. But see what happens. The market just absolutely like deals with it. It doesn't even act like I mean, it acts like it's there, but it just breaks through it and then just
Right.
at this point, I'm doing nothing. Like at this point, I'm like, all right, cool. Like, dude, this guy, come on, give me a break, man. Give me that home run. Give me that
Right.
home run. Give me that home run. So don't forget, all these break-even trades that we're taking is adding up 5%, 3%. At this point, I'm probably up about maybe plus 26%. That's fine. Excluding this guy, because this guy is probably in some serious shit, right? So I'm trying to make all this stuff add up. Now, so we've gone through how many scenarios, right? And check the very calm and cool setup.
Right.
We've gone through a pullback for a bigger retracement.
Right.
We've gone through trading the bigger retracement. We've gone through, this guy coming here and pushing back up. We've gone through when the market failed to make a new low and stayed within the box and how we ranged it. And then we've gone through the market coming out of the range and then pulling back.
Right.
We've gone through on how to trade it. We've gone through of even when that doesn't work out because you can get very blindsided by seeing your next level target quite close. And
Right.
then now we're about to go into another scenario. So you see all these scenarios when you watch this video over and over and over and over and over again. These are the scenarios that usually always occur in the market. Okay, so because I've been doing this for years now, once they occur, I just see it. Like, I'm not even gonna lie to you, I haven't traded in months now. Months. I haven't
Really?
traded in months, right? The last trade I hopped on was about maybe 800 pips, and then that's about it. That was probably um, maybe March or April.
Okay.
Probably got into the trade about March, held it all the way to end of April. Haven't traded much since then because I just haven't seen anything nice. Although I have, do you know, I've held gold. If you watch my YouTube videos very well, did you see when I analyzed gold?
I don't. I think I did, but I don't remember in detail about it. But I know you did predict it from I think from the point way down where it was to where it is now. I think it's
Where it is
approaching.
now. Good. So I mean, I still have gold. I think I'm going to check the market tomorrow. I think I should be getting out of gold any moment from now. So
Yeah.
I had those kind of trades running, so I was just like, you know what, do your thing, mate.
How many pips are you up in gold now?
Maybe about 8,000 plus
Oh wow.
because I have two positions open on that.
Right.
Yeah, so it's absolutely huge.
And when did those positions start? Like how long ago? I can't remember
Let me think. So I think I got into gold this time last year.
Okay.
Yeah. Um,
Well,
yeah, this time last year. Yeah. So
that's
that's it.
amazing.
It's amazing, right? Because then I don't have to stress. Like, but a lot of when you tell a trader, like, I got into this trade last year, they're like, "Oh my god, like, what are you saying? Like, does that mean I'm not going to trade for a whole year? That does not mean you're not going to trade for a whole year. It just means the market is working for me instead of me working for a broker
Right.
and keep giving
Right.
money to the damn broker, right?
Yeah.
Yeah, cool. So now this is when we try the Fibonacci for a bigger play, not working out. We literally come in and make equal highs. We're back in here. So I start to watch. A lot of traders who don't pay attention to this stuff, what they do is they come and now start drawing counter trend lines inside here because they feel like, when you're used to selling, this is the issue. when you're used to selling, right? Actually, it didn't look like this. It looked a bit like this, a lot more linear. Okay, because you want to cut it like you're like, so you start counting lower highs that don't exist. You're like, well, this is lower than this. I'm like, dude, shut up, man. This is higher than this, mate. These are equal highs. When you see equal highs, it means danger. Don't do it. And then you put the trade here, put the trade here, and then they're selling, and then they start making profit. And then you can see the market is, and then what happens right in the middle here. Because I tell you what, let me explain something to you. A quick market principle, right? If we're doing this, like this, oh no, sorry. We're doing this, right? And then we push and make equal highs. Are you with me?
Yes.
From the previous high. This is a high, lower high, right? And then because this guy is supposed to stop here, about here, and continue about his business down. But we come in and make equal highs about here.
Right.
Now, what this is called, and then potentially even make higher high. So this high is higher than this one, if you ask me. So what this is what they call a break of structure. This guy has broken the structure. The structure was like this. Okay?
Right.
This guy has come in to break a structure. Whenever you see a break of structure like this, never come and want to start looking for a possibility of a sell to the downside, because it's never going to happen. This is what actually happens. A change in structure, a break of structure, right? A break of structure, like we're about to see here. Actually, this came in all equal highs. So it's supposed to come here. This is where it's supposed to freaking come. It's supposed to come in here. This is your structure. Obey your structure for further downside, right?
Right.
This is exactly what is supposed to happen, right? However, we come in and put in equal highs. This is a breaking structure, okay? We might not have broken the high, but for the fact that we've come to, it's like you're coming to test your superior, right? You're coming to be like, yo, Wagwan, what's happening here, right?
Yeah.
Like, it's about to disrespect the structure. When you see that, as you can see, is about to disrespect the structure, don't come and draw a counter trend line here and want to look for potential sell opportunities. What is going to happen is this. It's going to come down in here and it's going to shoot out again. So this guy is now an impulse leg and it has decided to retrace. So you might think that this guy wants to actually start coming down like so. So you might want to, you start selling here. But what actually happens is that it comes in here and then it forms a Fibonacci A, B, C, and rallies all the way to the upside. So whenever you see that the high comes in to test previous highs, please don't go about drawing a counter trend line like so, because you will get into this trade, whereas this market wants to play a Fibonacci to the upside. Okay. To be honest, I took this buy trade. I'm not even gonna lie, because I always like it when the market like plays around with people. I like to see it when the market plays around with people. But don't do that. Obviously, I did that because I'm a lot more experienced, but don't do that, right? So people who sold here, and then now they're like, okay, market now comes in here, and then they're like, why are you stopping here? Like, why? You're supposed to be coming down. Why? See what happens. Picks up all the way to the upside. Okay.
That looks like that head and almost like an inverse head and shoulders there too.
Exactly, almost like an inverse head and shoulder. So now at this point, I'm lost. Like I'm like, okay, what the hell is going on, right? At this point, I'm lost. Like, what the hell is going on? Right? What the hell is going on? I'm like, all right, cool. So at this point now, you're like, you don't really know what to do. Like, we're now at a vantage point. This is now left shoulder, right shoulder, head. You know, the market. So now you need to go. Now you need to scream out for help. Where do you go to for help? Higher time frame. Okay. Higher time frame. So that, because when you're zoomed in too much and you don't really understand what's going on. See, if you're ever on a time frame and you're lost because of the amount of candles, you can't understand the pattern. If you're on a daily, go to the weekly. If you're on a 4-hour, go to the daily. Go up one time frame higher than you currently are if you can't understand what's happening on the time frame you're trading at the moment. It will help you by a wide margin. Okay. Because it simplifies it. That's a trick I learned. Okay?
Yeah.
It simplifies it.
Makes sense.
Sorry, give me a sec.
Can you hear me?
Yeah, give me a sec.
Okay.
Yeah. So, back to what I was saying. And as you can see, we popped up here, and I actually lost my line of thought. So yeah, so you go to the higher time frame, and then if I came on the weekly, you can clearly see that this was a left shoulder, this was a right shoulder, and this was a head, right? So when you come on the weekly time, so I'm going to take you over to the weekly time frame. So this is where you now, once you've exhausted all the available options on a lower time frame, you then go over to the weekly time frame to beg, take me back. So, as you can see very clearly, cool. So, I came on the weekly time frame. This is what was happening. So, this is my thought process. So, when I came on the weekly time frame, I'm like, left shoulder, so head is looking like a right shoulder. I'm like, damn, this thing is looking like we're about to blow out to the upside. So now I'm having conflicting signals from the market. The flow of the river is telling me down, but this guy is looking like he wants to start heading higher. So I said to myself, two things are going to happen. It's either we break above here, because you can have an inverse head and shoulder, but what makes it valid is when we break the neckline. there are a lot of failed head and shoulders that happen. What makes
Okay.
it valid? I'll give you an example. This is a valid inverse head and shoulder. Left, head, right. Why is this valid? Because look what happened.
It broke in retest.
It broke the neckline.
Yeah.
And when we broke the neckline, what did we do? It did what it needed to do.
Right.
But it needs to break the neckline like so and come and retest for the upside. So I was just watching this. And this guy wasn't looking like he wanted to. I could see so many failed attempts, right? So I said, okay, let me come over to the daily time frame just to have a look to see what exactly is happening. Okay. So I came over to the daily time frame. So I'm watching. There we go again. Oh my goodness. Give me a sec. So I'm watching this bad boy on the daily time frame. So I'm like, okay, all right, cool. I'm watching this. So I'm like, all right, cool. So I come and I draw a trend line like so. Very nice trend line. Now this analysis, I did it on my YouTube channel. If you watch one of the last analysis that I did, probably sometime 2019 April, you'll see me analyzing this and calling all the levels lower. So this is where I really came in and really I had it with the market. I really smashed the market into pieces, right? So don't forget we have our target, our major level about here somewhere. So I just said to myself, I'm like, all right, cool. Two things are going to happen, right? So it's either we come and we break above this neck. So don't forget, this was an attempt at the equal high. We came and attempted it. We were supposed to come and break it, couldn't break it, attempted it. So once I see all these attempts like this, I'm like, something is wrong, right? So I'm like, at this point, I'm like, two things are going to happen, right? Either we bounce off of this trend line and to the upside, or we break this bad boy to the downside. So I was waiting. If we break to the upside, not interested. If we break to the downside, interested, right? So what happens is we do indeed come and break, but I'm still not satisfied. So what I do is, sometimes what I do is I come and put in a minor level about here. Okay, and I say to myself, when we break both, come and speak to me. Okay, and as you can see, we did break both. If you're wondering where my stop losses went, I'll show you that shortly in a bit. That shortly in a bit means the same shit. Okay, so waited for this bad boy to be broken about here. I think I adjusted a little bit higher. Right? Sold about here. My first level target is looking all the way down here. My stop losses come above here. Now the market gives me pips. I remember the street very well, gives me pips, and then we start to turn all the way around. At this point, I'm like, dude, what's wrong with this market, man? And the market rallies all the way to the upside and stops me out. I'm like, okay. At this point, my head starts to play with me, okay? I'm thinking, okay, hello?
Yeah, I'm here.
My head starts to play with me. I'm thinking, okay, maybe this is what wants to happen.
Right.
I'm thinking maybe, but then again, I'm thinking, like I'm not looking for any buy situations, and I'm not even interested in buying when we're still under this neckline. In order for me to be saying I'm confident to buy, I need this guy to at least do this, spring out of here, and give me some form of a pullback, and then maybe I can consider a long position, right?
Right.
So I'm not even interested about here. So at this point, I'm like, you know what? If he wants to do this, that's fine by me. I think maybe this downside target is not exactly working out thus far. At this point, I've probably made about maybe 26 to 32% return. I'm like, okay, that was a tough run. That's okay. Not a problem. So, but then something interesting happens, right? I see. At this point, I've deleted this trend line because now my mind is now thinking, okay. And then when you draw your Fibonacci from swing low to swing high, everything just seems to be lining up to the upside. I'm like, what? That's what happens when you start this. You start over analyzing, especially when you hit. Because if you notice, this was my first stop loss in a stretch of like 6 trades. So this is where you're like, oh my goodness. Like this is where you start over analyzing and stuff like that. But I said, so my traders called me from the trading floor and they were like, sir, what do we do? I'm like, We do nothing. We wait. However, I started to notice that the market was coming back down. So I think this was on Monday, about here. And we had a meeting, and I asked my trader, I said, what day was this? What day was this? He thinks this was non-farm payroll day. So it's the 3rd of May. It's a non-farm payroll day. I'm like, oh, so there's a possibility that this was due to market manipulation. This was due to the volatility from non-farm payroll. They're like, well, there's a possibility of that. I'm like, okay, you know what's going to happen? What usually happens now I'm about to tell you a little secret here. What usually happens when I get stopped out for market manipulation, which rarely happens, but when it does happen, I wait for the market to pull back into where I got into the market the first time. So here. So I wait for the market to pull back into here.
Right.
And then if indeed we're able to come down here, I will execute the market again. And then you can clearly see that happen. It came down here and then I sold here. Where does my stop loss go? Where it went the last time. And my first level target was down here. And then this is exactly where I think the market decided to give up the ghost. It was tired of all the rigmarole and shit like that. And then I started to notice that, we collapsed all the way to the downside. We chilled around here for a bit. And then, so now you have confidence because, move stop loss to break even. I've taken out 50% of my position. Now I'm happy. Now I've seen a long stretch. Now I can now scroll down to a lower time frame to see if I can potentially add some more positions. I'm seeing the market pull back. If I came on a lower time frame, actually this was a setup. I didn't really trade this one. It's set up again, like so. Executed this one. The market came back. I took some profit here. Don't forget to take your trader. I'm not gonna jump or skip anything. I'm telling you from my heart. About here, sold somewhere around here. You know how I like my setups, very small and nice. I started to get some. We had the small setup. I said, all right, cool. He gave me another small setup. I'm like, all right, cool. I think this is how this guy wants to play. So I enter here again. Stop loss is here. We come here 50%. Come here, take out 50%. Move stop loss to break even. Take what I can take. The market pops back up, and then I notice that the market is struggling around here. I could try and come and actually, if this was a zone, it would be a lot higher because remember we put our zones on the body of the candles. So I noticed that the market we've actually broken out of this nasty range and we're currently testing the bottom of it. I look for another sell opportunity, and like I said, the third trade always does the trick. Sell here, stop loss is here, first level target here, and then the market pretty much just gives up at this point. The market just pretty much gives up, right? So in hindsight, this was my most lucrative trade. This one and this one, these two made me the most amount of pips. So between 1.3 to, so this was around 1K. It's about 700, so 700, excluding the trades that we managed to get out of here and excluding this one. So in total on GBP USD, probably walked away with about 3,000 pips. So my point here is these guys, they niced me here. These ones were like they were very stressful, but it was still returns. I was still stacking up my returns. I was stacking them up because just look at it. I don't know if you know what an estate looks like when you're in a gated residence and you're going left, going right, going left, going right. And then the moment you drive out of the estate, it's the freeway.
Right.
Exactly. You need to go left and right and left and right and left and right until it gets to the freeway. Okay. So what actually makes a trader is when he's inside of the estate, can you navigate your way out of this? So these are the different scenarios that happen, and then the market, it will always open up. It will always open up. This actually was not, this was definitely not called for, all of this mess. This doesn't always happen. With gold, it was a lot more straightforward. Yes, I did have some significant pullbacks of gold, but it didn't take me months to maneuver inside the freaking box range like this, right? So it comes in different ways. So the reason I'm teaching you this is to prepare your mind. Don't be in a hurry. Like, if you want to trade this market, you know, you need to think in terms of quarters, not months. You know, don't be
Okay.
looking to like return monthly stuff. Just place the trade, what it gives to you, take it and chill and look for the next opportunity. What you can hold on to it. What you can, you let go. It's as easy as that. There's no point being greedy, right? You do this,
Right.
you do this, and then you start to trust yourself. And when you trust yourself, you start to trust the market. And once you trust yourself and you trust the market, the money really starts to flow in, because then you can really take on funds from investors. You can literally put some money on from the credit card or the trading account, and then you know that you can actually return this money at the end of the day. So at the end of the day, it's all about trusting yourself, trusting the market, and believing, you know, in your strategy and stuff like that, right? You know, so
Right.
that's pretty much it, right? And then we obviously came down into major levels. And look what happens, right? One thing I like about the market, once the market is ready to stop, when it's ready to stop trending, it will tell you, look what happened. We came in here to major level. It didn't just say, oh, I'm in a major level, I'm just going to stop and start heading in the other direction. It actually decided to attempt it again. That's why I always tell you, we always come and attempt it again when we actually want to turn around, because we attempted it twice. Okay, for
Right.
the double bottom before we started to spin around. Same with here again. You know, it will come here and stuff like that. So this is pretty much my entry and my exit strategy. Now I'm just giving you this in addition with what you already have. Feel free to use whatever strategy it is that you have. Just use this in addition with what you have, or use what you have in addition with this, and you're pretty much good to go. So this is exactly how I enter and exit the market. Just use this in addition to what you have. I've already said already. And then, yeah, that's pretty much it. So in the next class, I'm going to explain to you, how do you know when it's time to stop selling? How do you know when it's time to start? Because what happened, I still made money when the market decided to start heading all the way to the upside. I made a lot of money.
Okay.
I made money. I made all these pips, all of this. So that's exactly what I'm going to show you next week. Okay.
Okay. Perfect.
So
Perfect.
any questions for me?
No, I think we're good for now. If I think of anything, I'll jot it down for next time.
All right, buddy.
Or
So I hope I've been able to impact, share some really cool stuff with you today.
Yep. No, definitely. It's helped. I think that today's session was very enlightful. It helped me clear a few things up in my mind. Um, so can I email you with questions or Telegram, or how would I do it if I
Oh
had
no, when you
questions?
have questions, just come to the next class with a question. I prefer to answer them verbally.
Okay, sounds good. And then will you be able to, when will you be able to send me the link to the recording so I can watch it again?
I'm gonna send, just give me a second.
Okay.